Today, we're diving into one of the most ambitious economic experiments happening on the planet right now. China's massive national push to turn raw data, all those bytes and clicks, into a formal economic asset. We're talking about something you can trade, invest in, and even get a loan against. It's an idea that could completely reshape the global economy, and it all starts with a very familiar metaphor.
Right. You've probably heard this a million times. But here's the thing. China is taking this metaphor and making it literal. It's building the entire infrastructure, the pipelines, the refineries, the markets, to treat data not just as a handy resource, but as the actual fuel for its entire economic future.
So how are they actually pulling this off? Well, it all comes down to this three-step journey. First, you take raw data and turn it into a usable resource. Second, you get it formally recognized as an asset that can sit on a company's balance sheet. And the final, ultimate goal, turning that asset into capital, something that can generate new wealth. Honestly, if you get this three-step process, you've got the key to understanding the whole story.
Okay, so how does a country take a big idea like data capital and turn it into a reality? Well, it doesn't start with fancy tech. It starts with policy. It starts with building the official rulebook for this whole new era.
It all kicked off back in 2020 with a really crucial first step, declaring data a new factor of production, putting it on the same level as things like land and money. Then in 2022, we got the Data 20 articles, which laid down the ground rules for who owns what and how it can be traded. But the real game changer? That landed in 2024, when new accounting rules finally officially allowed data to show up on company balance sheets. So the rulebook was in place. The big question was, how would the market react? Would anyone actually do it? Well, when that new accounting rule went live in 2024, the response wasn't just fast, it was immediate. In the very first year, a nice round 100 A-share listed companies, we're talking major firms on mainland China's stock exchanges, stepped up and officially disclosed data assets on their financial statements.
And what was the total value they put on the table? Over 22.4 billion yuan. Just think about that for a second. In only 12 months, a completely new asset class just appeared on the books, almost out of thin air.
Now here's where it gets really telling. Look at this breakdown. The communications sector absolutely dominates, making up more than 60% of the entire value. And why is that? It's because the state-owned telecom giants are sitting on some of the largest, most comprehensive data sets in the entire country. And this table just perfectly illustrates the sheer scale we're dealing with. China Mobile valued its data at a whopping 6.16 billion yuan, all built on a platform holding 2,000 petabytes of info. To put that in perspective, that's 2 million gigabytes. China Telecom's platform has 9 trillion data tokens. These are not just numbers, they're huge digital reservoirs that are now being treated as real corporate assets. But, pioneering a brand new asset class is never going to be a clean process. That first year also exposed some pretty big challenges and compliance risks as everyone tried to figure out these new, uncharted waters.
In fact, get this, out of those first 100 companies, a full 15% had to go back and issue corrections for their data asset filings. That right there tells you just how tricky and, frankly, confusing the whole process was in the beginning.
The errors pretty much fell into two buckets. On one hand, you had technical mistakes. People just misinterpreting the new, very complex rules. But then you had something more serious, cases of potential fraud, where companies might have been deliberately inflating the value of their data to make themselves look better financially. A classic example of the confusion was this issue of double counting. Some companies literally listed the exact same data set twice, once as inventory they were planning to sell, and again as an intangible asset they were using internally. It's a fundamental accounting no-no, but it just goes to show how steep the learning curve is for everyone involved. So to manage these risks and keep pushing the market forward, China is basically running a massive A/B test. And the two main laboratories at the heart of this experiment are Beijing and Shanghai, each taking a very different approach. You can think of it like this. Beijing is focused on setting the compliance floor. Their approach is cautious, it's rule-based, and it's all about building a safe, stable foundation. Shanghai, on the other hand, is the market frontier. They're the ones pushing the boundaries, experimenting with new financial products, and really prioritizing innovation. And this is the really exciting part. Shanghai is already jumping ahead to that final capitalization stage. They've launched these innovative loan products like Shui Day, where companies can actually use their registered data assets as collateral to get a bank loan. So the data isn't just sitting on the books anymore. It's actively funding business operations.
Now, to make all this possible, Shanghai is pioneering concepts like RDA. You might have heard of RWA, or real-world assets, which is about tokenizing physical things like buildings. But RDA, or real data assets, is different. It's a custom-built solution just for this new intangible asset class. It's about creating a secure, verifiable digital certificate for the data itself, often using blockchain to make it trustworthy.
So what's it going to take to get from these early experiments to a truly mature trillion-yuan data market? Well, experts are pointing to two absolutely critical factors.
First up, it's all about a shift in focus to building high-quality data sets. Especially with the AI boom, having unique, clean, and valuable data to train models is becoming a massive competitive advantage. Second is the development of what are called trusted data spaces. These are basically secure digital rooms where companies can run analysis on sensitive data without ever directly seeing or copying it. It's a genius way to solve that classic dilemma between making data useful and keeping it private.
And that really leaves us with the final massive question. Unlocking the true value of data isn't just a tech problem. It requires a triple breakthrough. You need the right technology, like those trusted data spaces. You need the right institutions, like the rulebooks being built in Beijing and Shanghai. And you need compelling real-world scenarios where using this data creates undeniable value. Getting all three of those pieces right is the challenge, and it's the trillion-yuan prize for whoever cracks the code in the global digital economy.